Fed juicing the markets, Morgan Stanley's currency prediction. Hi, everyone, and welcome to Ainslie Insights, brought to you by Ainslie Bullion, Ainslie Crypto, and the Gold and Silver Standard as the Ainslie Group celebrates 50 years. Today, welcome back, Sam, to discuss some pretty exciting moves in the market today. For those following gold, silver, and pretty much everything else, it seems, off the back of that recent rate cut and other factors that he's been exploring. How are you going today, Sam?
Good as always, Chris. Good to see you.
Good to see you. Gold, all-time highs again. What's going on?
Well, it looks like I guess the big rate cut was not priced in. It was quite a surprise because people are still piling into gold. And it also looks like, according to, several big banks, they think the Fed is just going to keep consecutive cuts going until mid next year. So Morgan Stanley's come out with that prediction. So as far as they're concerned, something like gold would be a good bet as a hedge against inflation.
And do you think, I mean, let's dig into this a little bit, because you've got the Fed making that move, which is, as you've said, the market may have interpreted it as a bit of a surprise there, even though it's hard to say how much of it was a surprise. It's more probably what happens next that's going to be interesting. You mentioned in the article something that's fairly provocative, that potentially Powell and Yellen might be manipulating the markets to influence the upcoming election. Talk to us a little bit about that. Do you think there is really a political game at play here as well?
Well, look, it's not necessarily what I think. It was Arthur Hayes, who is a co-founder of BitMEX, a really popular cryptocurrency exchange. Well, used to be more popular than it is now. But he was interviewed in Singapore last week, and he was asked about the rate cuts, and he said, this is a mistake. Inflation is actually way too high. And of course, at a crypto convention, a lot of people would probably agree with that. The same at a bullion convention. But he said the reason he thinks that the Fed is, juicing the markets is to make sure Kamala, the Democrats, have a win. And he thinks that Jerome Powell and Janet Yellen want to see this happen. Now, we could see in the past the Fed has not been impartial completely. They have done things, to favor one side or the other. We don't know if that's true or not. It's kind of a mystery. But one thing is, Trump did say very openly, Jerome, don't cut rates. Don't cut until after the election. I don't want, Biden, Harris, et cetera, at the time to have any advantage in the election. So it's something that Trump would really be not happy about.
And even though we don't know, like, it's fair to say that, like you just said, we don't know exactly what's going on. It is interesting that we've looked at this for quite a while, and there were a lot of predictions ahead of time saying, you just watch, the Fed will come to the rescue. It seems like if it's called before time and then you get a surprise larger than expected cut, I mean, we could certainly argue that that was coming anyway, but it's not really surprising that you're going to get a bit of pushback there from people saying, well, you're doing this deliberately to manipulate.
Well, you know what else is interesting? It seems like either the Fed's always just one step behind, or that is the case, because remember when people were saying, why did you cut to almost zero? This is a big mistake. This is going to end in catastrophic inflation. Said, oh, no, it's necessary. We need to help the markets from lockdowns and things. And then it became, why are you holding interest rates high for so long? Well, the jobs data is really strong. Economy's strong. Economy is robust. Okay, banks start to collapse and big banks are eating up little banks. Oh, that's, no issue there. Nothing wrong. And now suddenly the economy, the data is good. We had good jobs data come out recently, and they said, oh, we better do a supersized cut. Well, that's kind of weird. Why would you do that big cut now? And that's probably the point where Arthur Hayes' comments is getting some traction, because they're saying, look, we're just doing what the economy's asking for. We're following the data. As Jerome Powell says, data dependent. Well, okay, strong jobs data, and you're cutting aggressively out of nowhere right before an election. What does that mean? So that's probably where people are wondering about the, juicing the market, as he says.
Which is fair to wonder about. I know we've been talking up until recently about concerns that unemployment was going to be rising. So we suddenly seem to see a change there. Do you think that anything really has changed there, or do you think that that more positive data than expected was just a blip, and that we're probably heading back lower. Because I mean, maybe that in the Fed's defense, maybe that is what they're looking at, because certainly our discussions up until now have been more concerned than positive about it.
Well, we know that the whiplash, the up and down rate hikes and increases, they're supposedly to stabilize the economy.
Hmm.
Um, but yeah, we've had since 1913, we've had quite a few crashes, quite a few booms and busts for some reason. But look, anyway, I think if they held the rates high for longer, it would have been, disastrous.
Hmm.
If even, cutting now, has everything been averted? I mean, they're talking about a soft landing being performed successfully, but what's going to happen with, the debt and the inflation, and then you just have to cut again. So the cycle obviously hasn't been fixed. It's a short-term solution. But I put out an article the other week, isn't the market supposed to crash after rate cuts? That's usually what happens. This time could be different. Maybe they were just trying to do a soft landing, or maybe they were trying to juice up the election. We don't know which one, but in any case, whoever's holding hedges against inflation is doing really well right now.
They certainly are. And changing direction slightly, but probably correlated and linked to that discussion, you've talked a lot about the US dollar JPY pair and gold
Mhm.
prices, particularly of late. And obviously, we're seeing those highs again. What's going on from that perspective? Is there that relationship really playing out? Do you think traders can position themselves a little bit to take advantage from this? What's your view around what's going on in that particular area?
So Morgan Stanley came out. Their main point was that because of the rate cuts, they think that USD JPY is a fantastic sell opportunity.
Hmm.
So they think it's good to short USD JPY. This is according to Morgan Stanley, not according to me. So um, because continuous rate cuts going through to mid 2025 is just going to put downward pressure on the US dollar. And then we've seen the Japanese yen. They've been holding off, cutting. They've been trying to get some value back into their currency, much needed, and that's unwound the yen carry trade significantly. And then that trend's just going to continue. Now, look at traditionally, USD JPY was a hedge against gold. So, there are traders in the forex world who use that as a hedging strategy. USD JPY, they essentially move the opposite. If you look at a picture of them, one next to the other, it
Hmm.
looks almost like a mirror image. Now, with the crazy policies in Japan, which I'll just call crazy, it's gone a bit out of whack. But that's coming more into the. It's becoming a bit like it was before. Japan could be getting back some of its safe haven status in the currency, meaning USD JPY is looking very opposite to gold USD for
So,
obvious reasons.
yeah, and what's your general take on the longevity of that? Like, is it something that's probably coming to, like, from your perspective, not necessarily from the notes perspective, but is it
Mhm.
something that can really push out into that longer time frame like they're expecting, or is it more of a short term phenomenon, do you think?
Well, it's been a long-term phenomenon for a long time. I mean, look at the DXY. That's mostly just, um, you know, big part of that's just the yen. So,
Hmm.
uh, look, it really depends if Japan has some sort of crisis and has to change their path. But it looks like the U.S. is pretty adamant on cutting if Morgan Stanley's to be believed, and if the Fed's to be believed, because they recently said they're looking at more cuts as well. So yeah, hedging against U.S. dollar strength is essentially what the play is.
Well, we'll continue to watch that unfold, but certainly so far it's doing very well for gold holders, silver as well. Like they're both sort of having that little bit of a run today. So we'll keep paying attention to that. But thank you for your work and keeping us up to date on that as always, Sam.
Thanks, Chris. Good to see you.
Good to see you. Thanks everyone for watching. We'll chat again soon.